So theta in options contracts just simply symbolizes time decay. Father Time doesn't just suck in real life. When it comes to options contracts, time's not really your friend, especially when we're talking about basic option contracts like call options and put options. Think of it this way. All theta is a negative number that represents the dollar amount that the option you purchased is expected to drop in price every single day so long as other factors remain the same. And by other factors, I am talking about the underlying stock price, the volatility, so on and so forth. This is important to understand because if you think about it simply, the more time that a contract has until expiration, the more time you have to be proven correct in your conviction. And also, the more time you have to make massive profits. Now, when the time decreases, then the chance of huge movements in price to the upside or the downside decreases as well. And so this is why it's really important to understand theta and time decay in options contracts, because it can eat away at your potential profits really quickly. If you're expecting sideways price movement in the underlying asset or stock that you bought an option for, then it could be a really risky investment, because if it is trading sideways, then you're losing a lot of time and you're not really seeing the price movement in the direction you were hoping for with your options trade bet. And so with that being said, it's important to understand that a call option, a put option, the closer they get to expiration and the more time that goes by, the theta will eat away at your potential profits. Now, I'm going to make a separate video on the extrinsic value of options contracts, but that also has to do with this topic. And so make sure to subscribe to the channel, comment if you have any questions. This channel is small enough, I'll go ahead and address it. But also, let's dive into a real life example where I'm going to show you how theta applies and what might happen in the scenario that I'm correct and the price movement goes up in this call option that I bought, or if the price continues to trade sideways, what I could expect with this option contract. Okay, so let's take a look at my options contract for Netflix. I bought a December 16th, $265 strike price call option, which means it expires in a couple of months, but I'm really hoping in a couple of days when Netflix reports their earnings that they have a really good positive number of subscriptions, especially because of their latest success with shows, and that this price is going to go up quite a bit. And as you can see, if you're looking at it over the past year, you can argue that the price has been suppressed quite a lot, with a P at just 20.45. That's quite low for an innovative company like Netflix, and that has the potential to increase their revenue streams and profit streams in a couple of different ways. So let's take a look here. So as you can see here, the price paid for it was $1,000, and currently it's worth $1,279.19. So I'm up 25%. Why is this happening? Because this call option for $265, nobody really wants it right now because they could buy Netflix for $230. Why would they use my contract to purchase Netflix at $265? They would be losing approximately $35 on every share. So this contract right now is worthless. But why am I up 25% and the value is $1,255? Well, that's because of the potential of time. There's a lot of time for me to go ahead, close the gap between 230 and 265, and hopefully exceed it, making a chunk of profit. And so this potential is why I am sitting at a profit, and because over the past couple of days there has been movement to the upside versus when I bought it, which was around here. Now here's where theta comes in, and we'll cover intrinsic and extrinsic value in a different video, but if you take a look here, this entire options contract, there is no intrinsic value. So it is worthless if it was expiring today because no one would want to use it. As I said, it's a $265 call. Netflix only costs $230. So why does it cost this much? Because of time. However, there's a lot of time for me to still make a lot of money if I'm proven correct. But with every passing day, the odds of the price going above $265 for Netflix decreases. And this is where theta comes in, because it's time decay. So what would happen if Netflix just continued to trade sideways here? Well, my contract would expire worthless. And so the longer that time goes by and this contract is just moving sideways or to the downside or just slightly to the upside, I'm going to be losing value of what this contract actually costs. So one contract at a 265 strike price that expires December 16th, currently that would cost you $1,255. But with each passing day, this value would decrease. The question is, how much would it decrease by? And the way to answer that is theta. Theta tells you exactly how much this value would decrease every single day that the stock market is open and all other factors remain relatively the same, like volatility and this price and some other key things that we'll discuss in other videos. The important thing for you to realize right now is that I am sitting on a profit. Why? Because Netflix price started to move a little bit to the upside. But this gradual increase, if it stays somewhere around there, this option contract is going to go to zero over time. And the rate at which it goes to zero, that is going to be theta. I also want to mention that theta is not a constant. It's not a linear line if you look at the chart of theta. And it also matters if you're way out of the money, way in the money, or if you're at the money. Theta is typically highest when you're at the money, closer to expiration. But again, I might cover all this in a different video. For this video, I just want to explain that theta represents time decay. And in the example of this option contract, you might think it has some value and I'm up 25%, and it does if I sell it today. But the contract itself and the way it's set up is absolutely worthless. It costs something now because people are speculating. They are making bets that Netflix is going to go up as well, or maybe they have a position in Netflix that's a short position. They want to hedge their bets, so they're buying something that's a long call option for Netflix. So with that being said, let me know if you have any questions on theta, and I will try to address them in the comment section. Trying to learn with the rest of you, and just know that in a couple of days Netflix is going to release their earnings, and if Netflix drops a lot, Eddie, Promo Ambitions, going to be very, very upset because I lost a whole lot of money. But if it skyrockets, I'm going to be a happy camper, make a video about it, and we'll all give each other some high fives. So with that being said, I will see you all in the next video.